Good morning, everybody. My name is Mark from the Mark of Truth. Let's cover Friday's markets. Let's talk about some wins and some losses on those days. And if you were prepared for the inevitable red days that could come, or large drawdowns like the tariff drawdown, and were you prepared to capitalize on the markets returning back up? We're not financial professionals. We're not licensed professionals. We just share our opinions about what we're doing, and as we build our Market Truth community, what others are doing, and we bring ideas to the table, invest in others' time, invest in their families, their health, their fitness. So let's take a look at what we were doing on Friday. So my main trading account that I actually trade in is a plus $25,000 account. And one of the big things that's coming up this week is Palantir. We've been investors of Palantir since the beginning when it first started. We were investing at 27, and then we were investing at $5 and $6. And so over the years with option trading, selling puts, selling calls, and keeping our main position, we have 1,000% return on Palantir, and we continue to trade around those positions by collecting income, selling calls and selling puts, and trying to grow that position. And so it's been one of our most successful positions. And so Palantir, modest drawdown from the two red days Friday, coming into earnings though, but still very close to a 52-week high of 160. And so we're not concerned about market conditions. And even on Monday, if market conditions continue red, we'll continue to invest in Palantir long term. We have some put positions on as downside protection at the 145 level. And we have call positions that are call verticals from 150 to 180. And then I have 160 to 200. And then I have two 155 naked calls that are good till August 15th. Normally I don't short date options like that, but I believe it's going to be a NVIDIA type moment for Palantir on Monday, so we're gonna leverage that call by Dan Ives. Friday, we, as an investor, I always have insurance, and I call them insurance options, but options that protect your assets. And I use the rule of 1 to 3% of the value of account in monthly options, and then I continually roll them out. And it can, it's definitely an expense, just like car insurance. But during April's tariff tantrums and this drawdown right now, these options protect your assets and keep your account P&L positive, or at least even. So on Friday we had a SPY straddle at 640 that I had put on at the beginning of the week, good till August 15th. And that position drew down to the 620 level. We covered the bottom end of the straddle. I immediately invested some back in call positions at the 640 level. They were very, very inexpensive for 2 weeks out. And so if the market does what it normally does and green bounces back up to those levels, then we'll make some gains from those. And then I have a straddle at 620 on, so in case the market rips the other way, red again, we can benefit from that. Not many people like using 3x leverage options, but I do. They're naturally, they decay, but in the options world, I just look at it as another insurance expense. And so having 20 contracts of the $4.50 SPXS on Friday. I had 10 contracts of SQQQ, good to the 15th on Friday. I also had a housing short DRV 3X that I had been rolling and trading around because I still believe that we're going to have some housing trouble. And so that jumped up quite a bit, $2.50 or so. So I cleared some of that trade off. I kept two of the calls that are good for till August 15th in case there's continued selling, but I'll probably close that out because I have no real cost in it because of the profit I made. I cut the SPXS and the SQQQ3X options in half, so I took profits on those at the lows Friday closed. and I still have those other ones intact, along with the metals company, which big fan. I've been investing since $1 and $2, and we've seen it appreciate way up to as high as 8, backed off to 5 something during this red days, and then after hours, the CEO released some information on Twitter about big news coming next week, and after hours, it was up $1. So it got a big after hours jump. We'll see if that follows us on Mondays with his pre-market announcements about production and about some surveys and things that they've done. And I think when he mentioned production, that gets everybody excited, because once they're able to license through, I think it's called NOAA, and get out there and drag for the nodules that contain all the battery minerals, we believe this is a long-term hold. But I also trade options around it. I sold puts on Thursday at the 5.5 mark. Those are going to good till August 29th, but those are going to start printing positive because of the run back up in it. And so I've been selling puts and selling calls against a big position of 1,200 shares for a while, and I have my cost down below between $1 and $2 on this one. Let's see what else we had. We are investing in the company called Wolf, which is a semiconductor for EV chip player that was at one point $177 stock, expanded too much. Management got the company in too much debt. There was a weakness in EV chips at the 150 nanogram level, I believe, or millimeter, whatever they call it, nano something. But we believe there's a good turnaround story. North Carolina-based company almost got some CHIPS Act money, but because their finances were in such trouble, the CHIPS Act did not grant the grant to them of $750 million. So they filed for Chapter 11, reorganized, and are going to clear around $4 to $5 billion in debt. And they're tooling up for the 200 millimeter or whatever, nanogram, whatever you call the measurements on those. I'm not a techie guy, but I do know that those chips are fast and they're in high demand. And so we believe they'll come out of the bankruptcy. New CFO now, new CEO, I believe in September. So it's a long-term hold, but we wrote the $1 and the $1.50 puts for a couple months now. And it actually spiked a few times, and we traded some of those options off on the spikes on the call side. But we're going to hold that one for at least a year to see if that's a great turnaround story. So that's the one that we're really collecting small amounts of premium, because it is a little bit volatile, but it's not a high dollar stock. It's in the dollar range. So that's one to maybe put some shares away. And then we own Alar Technologies. We own Atai Life Sciences. We own the Kathy Wood and Tom Lee BMNR, not a big position. We own Black Sky Tech because it was a Palantir investment in Palantir affiliated contract company. So I've owned Black Sky for a long time. It peaked at like 29 recently, went back down to 20 after they did a 175 million shelf offering. But we believe that's got long-term growth potential. And so it's steady around 1886 right now with the drawdown. EVEX is a eVTOL company. We own EVEX, we own Joby, and we own Archer in our portfolio. We believe that's the future of travel. We own FFAI. I've owned this for a long time through, I think, two reverse splits. Kept adding to it, then introduced some options into it, and I've been able to collect some premium to get the cost down below $1. And so I'm in that long term. It's got some exciting news lately and a few shows they did, but there's a $300,000 or $400,000 AI vehicle that's pretty impressive, but it looks like they may get to production. So great turnaround story possible in the future, low cost investment. And then let's see what I got over here. Sorry about that. Lilium was a Palantir investment company. This one that Palantir invested in, and then Lilium has a contract with, but this thing is at 1 cent. So I think it's a LILMF now. So it's just sitting there with 100 shares at 1 cent, and who knows what'll ever happen. That one is just dead in the portfolio. Palantir, of course, large position in Palantir and option trading around it all the way up. So we're like I said, 1,000% on the shares, and we've just collected a lot of premium on this one, and the premium's really, really high right now. Although it takes a lot of capital to do it, you can do put verticals or call verticals or sell them and collect great premium on this one. It can be volatile. Tariff teardown, it was down at 70 something, right back up to 120. So if you can stomach volatility and you can go wider range. You can collect some good premium on Palantir. We own Polestar Automotive because I saw one in my neighborhood and I thought it was an impressive vehicle and bought it, and it's like $1.04, so it's just some shares sitting there. We've owned SoundHound all the way down to, gosh, $4 or $5. I think it might have been a SPAC or it might have went public at 10, but we've owned it for a long time. We have a 365% gain in that from holding it and adding to it. Never traded options around it yet, but Surf Mobility, SRFM, is another Palantir. Palantir made investments in this in stock and also has a contract. They're going to run the regional airspace for eVTOLs and vehicles that are electric vehicles are going to be up in the air, so you need air traffic control, and so they have some good technology. Jumped recently, but it's back down to 4, so long-term hold there. And I do not believe that one trades options. Of course, the metals company I just discussed. We own the VanEck uranium ETF because we think power and electricity and being able to power data centers and AI is the biggest issue. So we like Georgia has municipal, state, and tax-free bonds. We own a large position in monthly treasuries that we collect that 4.3% interest every month. That's a majority of our portfolio. So we like the income from that. And then Wolf, like I said, chip turnaround. We have a 1,000 share position in that, but we've been selling puts and selling calls against that position as it fluctuates from $1.50 to $2. Every once in a while it'll jump and we'll clear options on those and then continue to write them. But we believe that's a great turnaround story. So that's the portfolio right now. Right now we are 27,500 in equity. We have 4,600 in cash. So we're only 14% cash right now. So we believe with the insurance protection options we have on that's a 85% invested is a pretty good place to be. And it's been a great place to be because we've gone straight up from the tariff dump. And so going future though, we're going to continue to roll those protection options out and make sure that like Friday, we had a green $1,000 positive day. And so most lost on their positions, but we clear options like that, and then we push that money into cash, or we push it right back into the investments that we're long-term on, or put on new option positions. So we're very active traders. My Tasty Trade account, I have a Merrill Lynch account, I have Schwab, I use Thinkorswim, and so, but I eventually will roll most of these accounts, other than bonds and other than the long-term investors that we don't touch or trade, to Tasty Trade. I really enjoy their platform, and they've been adding lots of different stuff. I've been trading futures recently, some on Robinhood. I have a couple $1,000 Robinhood account I just play in, and I really enjoy Robinhood, and they've grown their business tremendously. But my main goal is to learn and teach and grow as a Tasty Trader. So thank you for this update, and appreciate you joining our community. That's the Mark of Truth on X, the Mark of Truth 12 on YouTube, and we've started a Spaces community. Love for you to join that. Pass it on to your friends. There are some rules with the community, but we want to grow your health and your fitness and your financial acumen, but we also want to invest in you too. So bring something to when you come, and we hope you receive something back from us. Thank you, and have an awesome Saturday.